You can do this even on your what's it called? When trading your pocket option, right? The same thing, top-down analysis, get to the lowest possible point and know what you're expecting, right? So this is already a clear downtrend. Like on this 15 minutes already, this is a clear downtrend. This is like almost a double top or a what's it called? An M pattern, right? An M pattern. We are now looking for a little pullback for the market to continue selling, right? This is a clear. If you are to use highs and lows, this is a low, right? This is a okay. In fact, the lowest point that gave rise to the highest point has been broken, and this is it, based on what we are seeing here, right? Um, this gave a higher low, but then what happened? Market broke this low, right? Did a little pullback into this imbalance here as well, this fair value gap, and of course started dropping, right? So it was really, really. In fact, it was having a very good trade. Yeah, it's just that I chose not to take the trade for today, right? You can see this imbalance here. The market opened right here, gave a pump, respected this high, dropped, right? So it couldn't just sell all the way. Yeah, it needed to balance out. Just like a chemical reaction. It needs to balance out before continuing, right? So the balancing out is respecting this fair value gap here, right? Now, okay, let me not go too deep, right? Yeah, but just know that okay, let me map it out so you see the exact same thing I did on that okay, this is it this point, right? And this I believe over time that's when you're gonna grab this. It might seem right. All right. So the space between this first candle and this third candle is this. And this has been a very good entry point. Now I have a personal um I could actually, with this, if I have taken this trade, right? This is simply what I'm gonna do. I get in here, my TP is gonna be this low here, right? My SL of course is gonna be above this high. And that's it, right? That's it. Like if I'm taking this trade, it's like clear, almost 1:5 risk to reward ratio, right? This is a clear trade, but I didn't want to take it. So right now, I have a new target, and the new target is this right here. Yeah. And looking at it also, I also have a fair value gap even on this 15 minutes time frame. Remember this one I marked here. Let me take this guy out. I have a new target. This is this zone here, 4,400, right? And since I'm looking for a short, right? I've already gotten my bias for this morning, right? I'm looking for shorts. I'm looking for sales. Okay. And I've gotten this zone from my 1 hour time frame. Now to refine this even more, right? I can bring it up here, right? And of course, this, all right? I'm focusing on this, right? This and this to come in here. Right. Regardless, there are still other on I think there's another favorite look up here, but I'm quite interested in this. And I'll wait for it to get back in here. Right? So that's gonna be my entry. So if I'm taking a short sell on this, I'll sit right here and wait. Right? Taking my TP just out. I might choose this tip. Alright. Then my SL, of course, certainly above this candle. So this is like roughly 1:3. So I'll wait. That's simple. I'll wait. All right. It might be funny enough, right? The market can actually hit this zone and come back here, but I'll wait regardless. I'll wait regardless. But this morning reaction was actually very, very Very, very good. You know. Then another thing is in any time frame you're looking at, if you're just confused, switch to another time frame, right? Let's say you're looking at the 5 minutes time frame and you don't really know what's happening there. Just switch to a higher time frame for it to make sense, right? Because if I've seen this, I would have actually taken it. If I've seen this move, I've taken it. I would have taken it, but it was quite um it was quite confusing, right? When I was looking at it. Okay. So we have what we're expecting on gold. So if you had to choose normal pairs, right? Let's say um maybe EURUSD, for instance. This is EURUSD. You can see the site to check the daily bias on EURUSD. Um, it's looking like a let's say bullish morning perhaps, right? But then this is a bullish market. Yeah, the market just did what we call. In fact, let me show you the same thing. Let me show you the same imbalance. This is the daily chart, right? Let me show you the same imbalance. So one thing about the chart is that whatever you think you're seeing on the 1 minute time frame, the same thing happening even on the 1 hour time frame, or even on the daily, or even on the weekly time frame, right? So the same imbalance that we are looking at is what's happening here. All right, we have this. The market's coming back down to balance out a reaction before going up, right? So if I'm considering a buy, yeah, this is actually a very good point to take my buy, right? If I'm a swing trader, I'll take a buy right here. My TP like, of course, this high, and I'll allow it to run. My SL will be way, way below last week Tuesday's low. All right. Am I even this should be no no, this should be like December 9th low. I'll allow it there. I'll just allow it to run. Yeah, I'll allow it to run. But however the case is, this is a bullish momentum being set up, right, on Euro USD from the 1 hour, from the daily time frame, even, right? So now to get what we want, we need to start breaking it down to, let me clear out these guys because we don't really need them. To get what we want now, see, we now need to start breaking it down to a lower time frame. Even looking at this point also, say, if I was there like November last year, this is a clear indication the W pattern having a higher high, yeah, a higher low rather. This is already a what's it called, a pattern for a very long a long this is a buy pattern, right? Once you see this is a blue pattern, it knows that okay, this is actually moving upwards, right? It's actually a buy momentum. So that is what I'm seeing here. So we've seen the daily coming down to like the 1 hour time frame. Um, right. How can we get the best moments to buy right now? Right, okay. I'm already seeing if I'm to consider a buy, yeah, the market, I just did a very nice reaction, right? But I can still wait for another reaction. I trade imbalance mostly, right? So looking at this, I've already seen an imbalance right here, right? And the market just respected it. Okay. So for me to go in again, I would want this high here to be taken out. So I would want this high right here to be taken out. Then of course come back to a retest. Then of course I take my long, targeting perhaps this high here, right? Just for this morning. Okay. So this is just market breakdown, tearing down the markets, seeing what you're expecting, right? Or predicting what you're expecting the market to do. So that's basically what it is. All right, that's basically what it is. I'm seeing a double top here, but I would want for me to entertain or for me to go in for because I wouldn't want to be taken out, right? I would simply want this. Okay, exactly, exactly, exactly. Now you can even look at what's it called, sir? You know, supply and demand, support and resistance. Yeah, this is a clear break and retest as well, right? This is a clear break and retest as well. If you look at it, right, this is a clear break and retest as well. Market broke this zone, coming back down to respect it, respected, and of course moving. So there are so many what's it called factors to put in together to tell that okay, yeah, this guy is actually moving upward. Then I don't want to talk about Fibonacci, but I think sometimes I use them because they kind of guide me to where I'm expecting to go. Now, this is a thought factor to tell you that you are on the right track, right? Mm. Now, so first of all, we have the fair value gap we've seen on the 1 hour time frame. On the 15 minutes time frame, we are seeing the zones that was broken, that was respected. Um, of course, a resistance that was broken and becoming a new support. Thirdly, we are seeing a low, a swing, yeah, the low and the high, yeah, and the market retesting into now. When it comes to getting highs and lows and knowing the best time for the market, knowing the best time to take a reversal trade, yeah, is of course if you're looking for buys, yeah, you want to buy at a discounted price. Like I would say, any point below from 50 down is a good point to actually buy. Though we buy here, we are quite late, would have actually bought right at this very point. Right at this very point. Yeah. So that's why you're waiting for a new high to be created so we can have another, of course, possible entry. All right. So for now, we can tell that our targets or whatever we are looking at is very valid. Right? And if you're looking for, I also have, I tend to always target, assuming I'm taking this buy here, this is exactly what I'm going to do. Assuming I'm taking this buy right here, it's going to be something like this. Of course, below. Our target is 150, 150%, right? 150% is always, 150% is always the distance between this low and this high. That's always 150. So all you're saying is that you are expecting the market to make exactly the same move, right? Are you seeing it? You're expecting the market to make exactly the same move, right? The same swing. Once it retest, you're expecting the market to make exactly the same move. So you can either use the Fibonacci or you can use this pattern I just did now. The market tends to always repeat itself. That's what I've noticed over time. So the main point is to be able to get in at the right time, right? So this would have been the right time for this trade, but since we've missed it, I'm looking for a what's it called? I'm looking for another opportunity. And the other opportunity I'm looking for now is right. I want this high here to be taken out. So once this high is taken out, it confirms that okay, yeah, this buy trade is still valid. All right. Once this high is taken, all I need is a new high, right? I've gotten my low, my high, I've gotten my higher low. All I need is a new high, a higher high, right? So once I get that, it's gonna be something like this, right? A high. Then my entry will be somewhere around here, whatever it is. Then of course I now target whatever point I'm targeting. Right. So of course, like I said, my target will be this this swing high over here. Right. That's what I'm looking at right now. That's what I'm looking at. Okay, that's what I'm looking at. So there's a possibility that this guy is going to move. Now I'm trying to forecast or predict the movement I'm expecting here. All right, you can move into this. Of course, you can see there's a balance over here. Can tap into this imbalance here. Now do a retrace. So this imbalance is just like a magnet that I know that is attracting this market. Apart from this imbalance, I have liquidity lying above this series of highs here. You know, whenever you see area that has multiple equal highs or multiple equal lows, above them liquidity are just like money to be grabbed by the markets to make any strong move. It's just like if you want to shoot an arrow, yeah, you need to throw it back to shoot out. Yeah. So that's force we are taking it back is simply what the market is doing when it's trying to catch liquidities, right? So if you look at, in fact, time might not permit me to share all of that today on this session, right? But perhaps over time, we're going to see areas where um a a sell market, a market that you know is going to sell, but at a particular time it does something quite interesting that like how would it do something like this? Let me see if I can picture it here. Before a strong move happens, it's always okay. Okay, I think this should be a perfect example. Look at this. Right? Market, of course, this is a high, right? This is a low. The market gave this. This is a lower, what's it called? A lower low. Sorry. High, low. This is a lower high, yeah. Normally, right, based on what you know about highs and lows, you're like, you know what? This is a perfect point to take a sell, right? Once you take your sell, and of course, you're targeting any point below this area here, especially the market to sell aggressively. But then what happened here? The market um came here, sold, came back here, respected, came back here, respected. Now, this is already, if you go down to the 5 minutes time frame, where's that point? Here, here. Okay, on the 5 minutes time frame, this is already like this is a strong resistance according to you, right? A strong resistance. The market came here, sold, came back here. In fact, this is a very good point to take on that sell. But then what happens? It breaks. Now, in your own mind, now you're like, you know what? This trend has broken. This high has been taken out. So this has been taken out. So let me go in for a buy now. Of course, the market will create an imbalance for you. Not knowing that this is the market just sweeping liquidity to now make the main move it wants to make. Main move being breaking this lowest point here, right? Breaking this lowest point, or let's say this lowest point from this high, right? So assuming this is a fake move, first of all, it has taken out the sellers, those that are sold here, and about to take out the buyers too, those that jumped in. Let's say you wanted to take your buy at this point. Take your buy, shooting, aiming for wherever the point is. Let's say you want to aim for this high over here. What the market do after a while, after giving you the hopes of okay, it's going up, coming back here, boom, before you know it, you are taking out, right? And the moment you are taking out, market started selling aggressively, right? Market selling. There's always just notice here, this is always the pattern, right? If it's for sales, right? It's always like this. Like this, like this. Then liquidity swept. Then boom. Right? It's always this way. It's always this way. And reverse is the case, right? To sweep this one above, then boom. This is also a hint of where the direction might happen. Right? At the start of the day, right? Where the market goes first can tell you that okay, if the market tends to move upward first at the start of the day, that tells you that okay, that might be a bearish day. The market tends to move downwards a little bit at the start of the day. That can be also a bullish day. And for today on Euro USD, right? What I'm expecting now, I've not seen it yet. What I'm expecting is to see a wick below the daily candle right now. I'm expecting to see a wick below it. So let's see and see if we're gonna see a wick below today's candle. If we don't see it, then it is what it is. There's no wick. Then all right. Okay. I was saying boom. So this is it. Market opened at this point, drops before moving up. So sometimes this is also my cue. These little things are things I look out for. Now, if I um it's this is the law of what's it called? Accumulation, manipulation, then distribution. Yeah. This is a manipulation, then I know all these things could be like but just bear with me, yeah. Then distribution. So that's just all it is, right? The power of three, right? If you can understand this, you can always make good money off the market. Just understand this. Accumulation, manipulation, right? The manipulation always go first. Manipulation always go first. Then of course distribution. So if I take this to bars, right? This thing I drew here is exactly what I have here. Look at it well. You can see accumulation, all right? Manipulated. Just to respect this. In fact, this is like a double low. What's it called here? Equal low. So more like a very strong support. And of course, market is going on. Voila. That's just it. All right. So certainly, yeah, we'll still break down this market. So but for okay, so that's just what it is. So by tomorrow, yeah, we'll break it down even more and better. Okay, so that you can grab. I'm saying in fact tomorrow I might even talk more of what's it called, pocket option, right? Pocket option is very, very good. But this knowledge is also necessary. Very, very necessary because if you have knowledge, you can actually use it to even trade your options trade. And there are, I told you about prop firms. Yeah, there are more opportunities in the actual forex um space. All right. Yeah, just for those that don't have access to much funds. Yeah, so instead of borrowing from someone, oh, give me this, or hoping and relying on whatever it is, you can leverage. Yeah, use like $50, have access to perhaps a 10K account, right? With 10K account, if you know what you're doing, you pass the phase, you get funded, you know, 5% of 10K is already 500. So you're already making times how many X? I don't know how many X, 1,000X. You put an account with $50, you're withdrawing 500. That's like whooping. But if you start to start growing your $50 to 500, you'll be so invested in it. I mean, emotionally, psychologically, more a lot. Okay, so that's why over time, once of course, I'll be, I also guide us, right? I also guide us on how to actually know how to understand these programs. There are so many bias about programs and all, how some are scam and all. Over time, I'll get to teach us, of course, this year, how to know good programs, how to follow them, how to understand their rules. That's the most important thing. Understand the rules of these programs and trade it, right? To make your withdrawals and of course keep living life. So according to this, you can see it's about to break this high. So you can study this on your own, and of course tomorrow we go again, right? So all the best, family, and cheers to an amazing day. I hope you understood. I think I was a bit fast on this session, but I hope you did I hope you did understand, right? So, cheers. Mm.